So students, today I will be talking about verification of assets and liabilities. This is your fourth chapter in auditing. Previous chapter was vouching, where we learned how the various transactions entered in the books of accounts are vouched. And we also came to know that vouching is the essence of auditing because it helps us to know whether all the entries made in the books of accounts are supported by an evidence called voucher, which helps us to also know the genuinity and the accuracy of the entries made in the books of accounts. All this they do to help them to achieve the objective. Help them means help the auditors to achieve the objective of account auditing, that is to find out whether the books of accounts are true and fair. They also have to check whether the financial statements are true and fair. So when we are talking about financial statements, it includes profit and loss account and balance sheet too. So when we are talking about balance sheet, students, you have got assets and liabilities there. And just with the process of vouching, we cannot know the genuinity and the possession value or the exact position of the assets on the date of balance sheet. That is because suppose you have made purchases during the year, you can check it through vouching. But suppose it has been depleted, it has been sold, then or suppose it has been mortgaged, we will not get an idea through vouching. So to know whether the assets shown in the balance sheet on the date of the balance sheet is true and fair, the auditors carry out a process called as verification of assets. According to Spicer and Pegler, the verification of assets implies an enquiry into the value, ownership and title, existence and possession, and presence of any charge on an asset. See, this definition can be split into 4 points. If these 4 points are checked with regarding to an asset or a liability, then the verification process is complete, we tell. Okay, so I will just tell you what are those 4 important points the auditor has to check whenever he does verification of an asset. Firstly, he has to see, students, whether the asset is in the name of the company. That is, whether the owner of that asset, the ownership titles lie in the hands of the company or lies in the name of the company. This is the first one he has to check. All the assets should be in the name of the company. The ownership title should be in the name of the company. Secondly, he should see whether that asset is physically possessed by the company, whether it is in the possession of the company on the date of balance sheet. That he has to check secondly. Thirdly, he has to check whether that asset is free of any charge. What do we mean by free of any charge? That means whether that asset has not been kept as mortgage for the loans taken by the company. If it has not been kept as mortgage, then we tell there is no any charge on that asset. If it is been kept for mortgage, then we tell there is a charge on that asset. This is the third point he has to verify. Fourthly, he has to check whether the value displayed in the balance sheet is accurate. How he will do this is he will personally do the calculations taking into consideration the various method followed by the company with regarding to its calculation and find out whether the value displayed in the balance sheet is accurate. So fourthly, he has to do the valuation too. And fifthly, students, he has to see whether it is properly stated in the balance sheet. We know when we talk about balance sheet, company's balance sheet it has got its own prescribed format with various schedules that has to be displayed in it. So according to the prescribed format, these assets should take its place in the balance sheet. So whether it is actually done by the accountant or not, it will be checked by the auditor. So once all these aspects are verified, students, then we tell the verification process is complete. So once it is complete, then we will come to know the genuineness of the assets that has been displayed in the balance sheet, which will help the auditor uh, to state whether the financial statements are true and fair. Okay. See, I was also talking about verification and valuation of assets. So, valuation is a part of verification, but when the auditor does valuation of assets, students, he has to value different classes of assets, and different classes of assets are valued differently. Okay, just let us know the main points regarding valuation and then continue with our concept. I was talking about various classes of assets. First class of asset is fixed asset. So, how is fixed asset valued? It is cost price minus the depreciation till date. Okay, so this is the way fixed asset is valued. Next, you have got current assets. Current assets, how is it valued? It will be cost price or market price, whichever is less. Thirdly, wasting assets. What do we mean by wasting asset? Usually we depleting assets or mines or quarries, we call it as wasting assets. How is it valued? The value of the quarry minus the extracted value from the mines or quarries. So that will be the value of the wasting asset. Then you have got intangible assets. Intangible assets, how is it valued, students? We have to take the cost price minus the written down value. Then the fifth class of asset, you have got fictitious assets. How is fictitious assets valued? Again, it is the value minus the written down value. So this way, different classes of assets are to be valued, and the auditor will check whether the accountant has valued so. Okay. So now for us to get a correct image or correct idea about how the verification and valuation is done in the companies, they have given us few examples of assets with the help of which we will get a clear picture what and all documents and what is the procedure actually followed by the auditors. Okay, so the first asset which they have given to us is called as land and building. So when we talk about land and building, there are two types of land and building they have covered here, that is freehold land and building and leasehold land and building. Freehold land and building, you suppose it has been displayed in the balance sheet freehold land and building 5 lakh rupees, then that has to be verified and valued by the auditor. Okay, so now firstly he will check whether there are any freehold land and building purchased during the year. If there is anything purchased during the year, then he will ask for the purchase agreement or the sale deed. And usually, students, these fixed assets and all are bought through brokers or through auction. So then he will also ask for broker's sold note if it is through broker, or if it is through auction, he will ask for auctioneer's note. So there the date of purchase, the amount of purchase, the type of asset that you have purchased, the brokerage or the auctioneer's fees you have to pay, all that will be mentioned. So that will show the actual it will show whether actually there was a sale, sorry, not a sale, purchase done in the organization or not. Okay, so he will ask for all these documents to know the genuineness of the purchase, and then he will also see whether this asset purchased has been registered in the name of the company under Indian Registration Act. So a registration copy also he will ask and verify and see whether the name of whether the um, asset is in the name of the company, whether it's registered in the name of the company. So title and ownership he is satisfied. But one more point you have to keep in mind here, students. When he has to go for registration, he has to pay registration fees, he has to pay legal charges, filing fees, and when it is bought through broker, he has to pay brokerage. When he has to buy through auctioneer's fees, all this he has to buy. So any expenses that the company incurs in acquisition of the asset can be capitalized or has to be capitalized. Okay, suppose 1 lakh worth of asset he is purchasing, and all these expenses together come around 10,000. So what is the cost of the asset that he has purchased? It will become 1 lakh 10,000 rupees. So whether it has been followed in the company or not during that year, during regarding that purchase of land and building, will be verified by the auditor. Okay, and land alone is an asset which will be appreciated and will not be usually depreciated. Okay, so all these aspects he will see if there is a current year purchase. Suppose this land and building is pre-existing, then he will ask for the documents, which the title documents or the ownership documents, which proves that the company, the land and building is in the name of the company. Registration copy, sale deed, he will ask for that, and he will see whether it is all done according to the procedure and whether it is registered in the name of the company or not. He will just check the title deeds. Yes, he is satisfied that title and ownership is in the name of the company. Now he will next see whether it is physically possessed by the company. Okay, there are also field visits which are done by the auditors. So they will physically go to that spot where the land and building is there, and they will go and verify and see whether it actually exists, and whether it is in the possession of the company also. So physical field visits are done, and physical verification has been done to know whether it actually exists and it is in the possession of the company. So second point is also done. Thirdly, they want to know whether it is free of any charge. So they will ask the accountant if this property has been pledged or mortgaged for the loans of the company. If it is so, if it has been pledged, then he will ask for certificate of mortgagee. So from the company becomes the mortgager, and the bank where he has mortgaged becomes the mortgagee. So he will get a certificate from the banker specifying the loan for which this asset has been kept as mortgage. So that certificate of mortgagee will be asked by the auditor to know exactly whether it is free of any charge, or if there is any charge, to what amount this charge has been claimed by the company. So the third point is also done by him, verified by him. Fourth is the valuation part. Valuation of fixed asset is cost price minus the depreciation. So till date, the depreciation has to be deducted and the amount has to be displayed in the balance sheet. So every year he will just go through whether the same method of depreciation is followed, students. If they have changed the method of depreciation during the year or previous year comparatively, then it will be he will ask for explanation, and it has to be explained rightly. Okay, so he will do the calculations on his own and see whether the amount displayed in the balance sheet is the same. So if he is convinced, then the last part, whether it is stated properly, it should be stated in the balance sheet under which heading? Under fixed assets heading. So he will see whether it is stated under fixed assets heading, and he is satisfied. So all the 4 to 5 aspects of verification he has completed, and he ticks that land and building asset, telling that signifying that the verification of this asset is complete or is done. Next, he talks about leasehold land and building. Leasehold land and building, here what do you mean by leasehold land and building? When the asset has been purchased for lease, the lease will be for a fixed amount, and to know about this, to know about the authenticity or ownership of leasehold property, he will ask for lease agreement. In lease agreement, you will have details regarding the amount of lease, the period of lease. All these details will be there for you. So he will check the lease deed, and then he will see whether the lease deed is registered in the name of the company for that period of year, that period of time, and then he will see whether this lease landhold property is free of any mortgage, or is there any mortgage with regarding to this property, and then when he has to value, he will spread this lease amount for that number of years, and he will see that every year a fixed portion has to be shown as depreciation till the total completed period. So this way he will check the leasehold land and building. So the next asset which they have covered here is, students, plant and machinery. So plant and machinery is also another fixed asset. Here also you have to check all those 4 to 5 points with regarding to verification. Firstly, you have to see regarding the title and ownership of plant and machinery. So here you can tell, firstly you have to see if there is any fresh plant and machinery purchased during the year. So if it is purchased during the year, students, you have to ask for purchase sale deed. Here also, since it's a fixed asset, usually they purchase it through a broker or through auction. So you should ask for broker's sold note or auctioneer's note. There you will get complete details regarding the model of plant and machinery that you are purchasing, the purchaser from whom you are purchasing, the amount of purchase, the date of purchase, and then the brokerage you are supposed to pay, the auctioneer's fees you are supposed to pay. All the details regarding that current purchase you will get from that document. So you will take that document for proof to see whether the same amount has been shown even in your books of records. Okay, so whenever I told you in the previous asset also, whenever you make a purchase during the year, you have to also see that is there any other expenses you are incurring in acquisition of this asset. If so, you have to capitalize those expenses. For example, if it is a plant and machinery, suppose you are importing it, students, then you are supposed to pay import duty, you are supposed to pay customs duty, clearing charges, dock charges, and all that to acquire that asset. So all that you have to capitalize, and then you will have carriage inwards, that also you can capitalize, and then you will also have installation expenses, that also you should capitalize. And if it is huge plant and machinery, students, they also will register. So registration fees, legal expenses, all that you have to capitalize. Okay, so whether all this has been done in the company and rightly it is recorded in the books of accounts or not, it will be checked by the auditor for current year's purchase. Okay, but there may also be various plant and machines which are pre-existing. So to check with regarding to those plant and machineries, the auditor will ask for schedule of plant and machinery. The schedule of plant and machinery is nothing but the list of plant and machineries that are existing in the company. You will have the number of the plant and machinery, you will have the model in that, the date of purchase, the amount of purchase, the life of that asset, and also the depreciation, that the method of depreciation that has been followed with regarding to that asset. All these details will be mentioned in schedule of plant and machinery. So it also has to be certified by a authorized official of the company or an authorized engineer of the company with regarding to that values mentioned in the schedule of plant and machinery. So he will take that plant and machinery schedule, and then he will cross check with you will have a ledger that is being maintained in the company with regarding to plant register. There will be a register called plant register. So he will compare all that plant and machinery details with plant and register. It should be one and the same, and then he will keep this plant and machinery schedule and do the further verification with regarding to plant and machinery. If suppose there are 10 models in the company, he will ask for the documents of those plant and machineries, and he will check whether all that are in the name of the company. Title and ownership should be in the name of the company. He will check that, and next he will see if the any of these assets have been mortgaged for loans in the company. If it is so, he will ask for encumbrance certificate or title of mortgagee, certificate of mortgagee he will ask. It has to be produced by the auditor to know whether the asset is free of charge or not. And next, what he has to see, he has to physically go to the factory premises and see whether all the 10 plant and machineries are physically present in the company. Okay, physical verification is also very, very important to know whether physically it is possessed by the company. When he goes for physical possession, suppose he finds only 8 machineries there, students, and then when it is inquired and the auditor accountant replies 2 of their machineries which is in the name of the company are in the branch office, then he has to ask the branch manager to certify the same. So he has to get a certificate from the branch manager certifying these 2 model of assets are physically present in the branch office of the company. So physical verification has to be done, and then he has to go for valuation of plant and machinery. Plant and machinery, when he is valuing, he has to see if there are any additions made, it has to be recorded. If there are any sale made, it also has to be recorded. If there is any outdated machineries during the year, which has to be treated as scrap, that also should be recorded. He should see all this. And suppose there is sale, students, then he has to see whenever there is sale, there will be profit or loss made on sale. So this profit and loss amount should be treated as revenue. Apart from profit or loss, the amount that you get, apart from this amount, that sale amount should be treated as capital amount. The profit or loss should be treated as revenue amount. So this bifurcation with regarding to capital income and revenue income has been done in the company by the accountant or not should be checked by the auditor. Okay. This is with regarding to the sale of plant and machinery. And how do they value plant and machinery, students? It will be cost price minus the depreciation. Cost price minus the depreciation. He will calculate on his own. If it is in existence for 5 years depreciation he will minus, this year's depreciation also he will minus, and find out what is the value on the date of balance sheet. With regarding to plant and machinery, that's it. I think all these points, if you cover under plant and machinery, suppose there are any repairs regarding plant and machinery that the company has incurred during the year, students, that also should be treated as revenue expenditure and not capital expenditure. So all these points has to be looked into by the auditor during verification of plant and machinery. The third asset that they have given is goodwill. Goodwill, it's an intangible asset. Goodwill is the value for the reputation of a company. Sometimes goodwill will come into the books of accounts when you purchase a business. The goodwill will be the excess amount that you pay over and above the assets of the company. So that should be displayed. I suppose the assets of the company is 1 lakh and you're paying them 1,20,000. So then 20,000 will be treated as the goodwill amount. So that should be displayed in your balance sheet. So goodwill can appear in the balance sheet through purchase. Secondly, goodwill also can appear in the balance sheet when it is created based on the reputation of the company. There are various methods of calculating goodwill: super profit method, net asset value method, capitalization method. So which method they are followed, that has to be stated to the auditor, and he does the calculations on his own and finds out whether the value has been rightly estimated by the company or not with regarding to goodwill. Thirdly, sometimes heavy R&D expenses or advertisement expenses will be treated as goodwill. But the auditor should see that this should not be treated as goodwill, but it can be treated as deferred goodwill. That huge expenditure on advertisement for a new product, that sometimes they treat it as goodwill, but it should not be treated as goodwill. It can be treated as deferred goodwill, and it has to be shown in the balance sheet as deferred goodwill for a fixed period of time. Okay, so these are some of the points that you have to check when the auditor has to check when he goes through the item or goes through the asset called as goodwill in the balance sheet. How it is valued, students? Since it's an intangible asset, it will be valued as cost price minus the value of written off till date. So this is how it is valued and displayed in the balance sheet. This is regarding goodwill. Next item which they have included here is investments. So when we are talking about investments, the company would have invested in government bonds, non-government bonds, in securities, shares, bonds, etc. So all this together will be displayed as investments in your balance sheet. So when this item called as investments are verified, here also all those 4 to 5 points has to be checked by the auditor. Okay. During the year, if the investments have been purchased, or during the year if investments have been done, students, then he has to ask for the receipts with regarding to amounts paid for investments, and any amounts that he has paid for acquisition of this investment should be capitalized. Suppose through a banker you are doing investments, you have to pay bankers fees. Okay, so that banker's fees has to be capitalized. So during the year, if any investments have been made, so that has to, through brokers only, usually you go for investments and all that, or bankers also you can do investments. So bankers advice note or brokers advice note will also be asked for, and that will give you an correct picture about the total amount of investments made during the year. So during the year, investments has to be checked with evidences, and suppose there are already existing investment, students, he has to ask for schedule of investments. The schedule of investments again consists of the total investments made by the company, all details regarding the name of investment, the type of investment, the date of investment, the amount of investment, the interest or dividend that you will earn on that investment, the date or the date on which you will earn that investment, interest, all that details you will have in the schedule of investments. So this schedule of investments will help him out to do the verification of this item called as investments. So he will take the schedule of investments and physically verify all the documents with regarding to the investment shown in the schedule. Suppose there are 25 investments shown in the schedule, the auditor will ask for certificates which will act as a proof for the title and ownership with regarding to all these investments in the company. He will ask for the certificates of shares or bonds or um, securities. He will ask for those certificates, and all the 25 certificates has to be shown by the accountant to the auditor. He will physically verify, and it should be done in one stretch, students. If not, there may be substitutions or some malpractices which can happen. So at one stretch, all the certificates with regarding to the investments has to be verified by the auditor, and he has to see whether all that are in the name of the company. Sometimes the investments certificates will be kept with the trustee, so then they should ask for trust deed and a certificate from that trust telling that these certificates are lodged with the trust for safety. Sometimes these certificates will be lodged for safety in bankers. okay, in banks. So that time the auditor should ask for banker's statement with regarding to lodging of these certificates for safe custody in their lockers. So once he gets a certificate from the banker stating that 25 certificates have been lodged for safety in their bank, then he is assured that physically it is present in the company, and that it belongs to the company too. It belongs to the company too. So title and ownership he checks. Physically he verifies all the certificates, and then he will next ask if it has got any charge on loans, if some investments are pledged for loans. If so, he will ask for certificate of mortgage, if any. And fourthly, then he will go for valuation. Valuation of investments, it is usually, students, cost price or market price, whichever is less. Okay, cost price or market price, whichever is less, that is how the investments are valued. And in the balance sheet it will be shown separately under the heading called as investments. Under the heading called as investments. Okay, there are, when we are talking about investments, you have got registered investments, inscribed registered stocks, inscribed stocks, share warrants, all this that will come into picture. If it is registered stock, students, then in your company's name the certificate will be issued. If it is inscribed stocks, it will be issued by RBI or some of the government or local bodies. The name of the company will not be mentioned, but in that situation you should ask for the of receipt or invoice which shows that you have invested that much amount in that particular inscribed stock. Even then, if you are not satisfied, you can write to the agency, or you can write to the institution which has issued the inscribed stock, because the name of the company will not be mentioned. You can ask them to certify if this much value of stock has been invested by this particular company in their institution. So they will send you a reply telling that, telling what is the fact. And suppose you get a positive reply from them regarding the amount of investment, then it matches with your data and you are satisfied that it is in the name of the company, and actually the company has made that type of an investment. Regarding bearer bonds and share warrants also, you can write to the issuing institution and get it clarified that this company has got this much of share warrants issued by that particular institution. Okay, all this you can write for investments. And then you have got another asset called as stock. When we are talking about stock is also one of the asset which you can see in the balance sheet. And stock comes under current assets, and it plays a major role because it has its presence in all companies' balance sheets. And if the stock item is not valued properly or verified properly, then your balance sheet does not give you a fair picture. So therefore, this stock part has to be thoroughly valued and verified by the auditor when he is into the process of verification and valuation. Then how this stock is verified and valued means, the stock taking method should be verified and should be verified by the auditor. The internal check system with regarding to stock, that also has to be checked by the auditor. And the valuation method used by the accountant in the company should also be checked by the auditor. So these 3 to 4 important points he has to keep in mind when he is doing verifying this item called as stock. Firstly, when I was talking about stock taking, students, whatever stock also consists of raw materials, semi-finished goods, finished goods, etc. Okay. But whatever raw materials come into the company will directly come into stores department. Will directly come into stores department. And in the stores department, there will be a person called as storekeeper who will maintain stores ledger, and stores ledger he will be following one method, one of the few methods that are there. He may follow LIFO method, FIFO method, average stock method, simple average method, weighted average method. Any one of the methods he will be following. So the auditor has to check whether this method of stock taking matches with the variety of stock that is present in the company, and whether he has maintained the records accurately. That is the first part the auditor checks. He checks the stock ledger whether it is accurately and efficiently maintained by the storekeeper. Secondly, he has to, we tell, physically verify the stock on the physically verify the stock. But this auditor is not a technical person. It's a very complicated issue for you to verify the stock and value the stock. And therefore, since he is not a technical person, what the Auditing Act tells is he has to be physically present when stock taking is done. See, how stock taking is done means it's a general procedure followed in most of the companies. In the stores department, you have got different types of stock that is present. The stores department people are not involved in it. They are given a week's uh, off from that work of their department. Another department person, another department individuals, maybe purchase department individuals, will be given the stock taking work for work. Maybe 4 people will be allotted this work. First person has to call out, and all these stores are maintained in bins or racks specified for different types of goods. So one person will call out the number of goods in each rack, the other person records it, the third person will write the price against that stock, and the fourth person multiplies and gives the value of that particular type of stock in the organization. So this way stock taking takes place. Stock taking takes place. When this is being done, the auditor or the auditing staff should give surprise visits and see whether scientifically and effectively this stock taking procedure is undertaken in the company. So this part he has to take care of. And thirdly, valuation of stock has to be done. As I told you, stock includes raw materials. How the raw materials are valued? It will be valued at cost price. Suppose it is semi-finished goods. Then how is it valued? It will be cost price plus the manufacturing expenses, the factory expenses. He has to add, and at that value, the semi-finished goods has to be valued. Then if it is finished goods, how it is valued means still production cost. Okay, the cost price plus the manufacturing cost plus the production cost, all this should be added till production cost, and this distribution expenses has to be excluded. So other than distribution expenses till production cost, the finished goods value has to be taken into consideration as value of finished goods. And usually one line rule for stock is cost price or market price, whichever is less. Okay, so this also has to be followed in the company, and the auditor has to check whether this has been done with regarding to stock of the organization. Okay, so these are the different types of assets that you have to know with regarding to verification and valuation of assets. Thank you.